Hey everybody, I want to dive into a question that I get asked a lot as a certified financial planner, especially as my relatives, friends, clients, whatever, as they get older and get towards Social Security age, they ask me, will my Social Security benefits be taxable? And the answer is maybe. Before we dive into all the specifics, please take a minute and check out the link you see on your screen. Get a special message from our sponsor, The Motley Fool. It's the best way to support this work I'm doing on YouTube. Again, fool.com/Frankel. And don't forget to subscribe to my channel if you don't already. So let me share my screen. All right. So for some Social Security beneficiaries, your your income can be taxable, but under no circumstances is all of anybody's Social Security considered taxable income. When Warren Buffett receives his Social Security checks, 100% of that is not taxable income. Even for the wealthiest of the wealthy, some Social Security is always tax exempt. So, a couple of little key things to know before we get into the actual income calculations and things like that. About 40% of people who get Social Security pay some sort of tax on their benefits. So, another way to say that is 60% or 6 out of every 10 Social Security beneficiaries pay zero tax on their Social Security benefits. We'll see why that is in a minute. But the short explanation is if Social Security is your largest source of retirement income, it's highly unlikely that you will have to pay tax on your benefits. The system is designed so that the higher earners pay tax on some of their Social Security benefits, and those taxes go back to help fund the program, which I'll get into in a little bit. But the majority of Americans don't pay any Social Security tax on their benefits. Um, so here's why. Before we can really determine if your Social Security benefits are going to be subject to tax, there's a number you need to know, and it's called your combined income. And this is an income figure that is only used for this purpose. It's not like taxable income, adjusted gross income, any of those that have a bunch of different uses. Combined income is just used for Social Security benefits. So to calculate this, you need three numbers. You need your adjusted gross income from your tax return. You could use last year's if you want to estimate what it's going to be this year. So your adjusted gross income number, which you can find on your 1040 form, half of your Social Security benefits. So if you get $20,000 from Social Security, you would use 10,000 in this calculation, and any non-taxable interest income you may have. This obviously doesn't apply to anybody, but if you have money in things like tax-free municipal bonds, that would count as combined income. So, for example, let's say that you have adjusted gross income on your tax return of $30,000. You receive $2,000 from a tax-free municipal bond you bought, and you get $20,000 in Social Security benefits. You would calculate your combined income as the $30,000 in adjusted gross income, $10,000, which is half of your Social Security benefits, and $2,000 from tax-free municipal bonds. The big takeaway before we move on is that Social Security has the least impact on your combined income because you only include half of it. If you remember back a few slides when I said that if Social Security is your primary income source, it's very unlikely you're going to pay any tax on your benefits. The reason for that is this formula, because only half of your Social Security is considered in the formula that determines whether or not it's going to be taxable. So this will be really easier to illustrate if I kind of break down the three different categories of who gets taxed and who doesn't on Social Security. So number one, if your combined income is less than $25,000 for an individual tax return or $32,000 for a joint tax return, you will not have to pay any taxes on any of your Social Security income. So if you file an individual tax return, you have $10,000 of adjusted gross income, $20,000 in Social Security benefits, and no tax-free interest. You wouldn't pay a dime on your Social Security taxes, just for one example. But below those two thresholds, you have zero worry on paying any sort of income tax on your Social Security. The second group are people whose combined income falls between $25,000 and $34,000 for individuals, or $32,000 and $44,000 for joint tax filers, as much as 50% of your Social Security benefits can be taxable. Remember, it says up to. There's a really complex worksheet that I don't really want to get into in this video that determines how much of your Social Security benefits will be taxable. So if your combined income falls between those ranges, your actual Social Security tax is going to be based on anywhere from 0 to 50% of your benefits. So depends on your exact situation. Again, there's a worksheet that you can use to determine this, but no more than half of your Social Security benefits will be counted in your taxable income. Group number 3 are people whose combined income is greater than $34,000 for those who file individually and $44,000 for those who file jointly. If your combined income is greater than those thresholds, up to 85% of your Social Security benefits can be taxable income. Again, that says up to. Unless you're the wealthiest of the wealthy, the number is probably not going to be exactly 85%. It's going to be somewhat lower than that. But it can be more than 50. It's less than 85. That's the highest Social Security income tax rate. And again, your marginal tax brackets will be applied to this. So again, after you calculate your combined income, you still have things like all of your tax deductions. Remember, because this is based on adjusted gross income, Social Security income, and tax-free interest. It's before you calculate things like tax deductions and credits and things like that. So the actual amount of tax you're going to pay on Social Security might not be anywhere close to 85% of your Social Security benefits actually applied to your tax rates. So take a breath. It's not going to be this much, but this is just the most it could possibly be. And just a final kind of thing to know, if your Social Security does end up getting taxed, it doesn't just go into the general U.S. government's coffers. It goes right back into the Social Security program. In fact, out of the roughly $1.35 trillion Social Security made last year, over 50 billion of that came directly from taxing benefits. The idea of this, and it wasn't always this way, this is a relatively new phenomenon where Social Security benefits are taxable. It's only been this way for a few decades. If the whole idea here is that the highest income retirees are giving a little bit back to subsidize the program, and Social Security's formula generally favors lower income retirees. So it's really kind of a way to create an extra source of income for the program that funds, the greater, the collective retirees of the United States. Hopefully you found this informative and enjoyable. Let me know if you have any questions. I'll do my best to answer anything individually. I want to know what you need to know about Social Security taxes that I maybe didn't cover here. And thank you for watching. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from the popular product Stock Advisor. Stock Advisor has beaten the market by nearly 5 times. So go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 767% as of July 5th, 2024, and are measured against the S&P 500 returns of 163% as of July 5th, 2024.